Assalamualaikum and hello everyone, welcome back. This is the second video discussing the preparation of statement of cash flow under the direct method, and this is the second video where we have already come to the preparation up till the cash flow from investing activities, and we were adopting the bottom-up approach. And if you are interested to watch my first video, please do so and check the link down the description below. So we will continue now preparing or finding the information under operating activities. So if you look in my statement here, most of the things have been done except for the operating activities that I color code as purple. So let's look at the first item for your investing activities, which is to find cash receipts from customer, right? To find cash receipt from customer, what I will do is I'm going to open up this section here that I have already hidden quite some time. I'm going to open up now just to show you that I'm going to show that in working one. So I'm going to construct the T account, and I'm now moving on to actually step number 5, where we have done step 1, 2, 3, 4, and now it's step number 5 to determine the cash flow from operating activities, where I will have to adjust out any non-cash and non-operating transaction that have impacted the operating cash flow. However, for this we are doing this for what? For our direct method, so you would see our focus is more on looking at cash receipt from customer. Okay, let us have some recap. Or what you can do now is, what are cash receipt from customer? Yep, I have put some notes here, right, at the end of this T account, so that you can have a look of what is cash receipt from customer. We are trying to find out what are the cash inflow from the sales revenue for the current accounting period. The collection from the sales revenue coming from the credit sales. That's why we are trying to collect and trying to construct the trade receivable. So we're going to reconstruct the account receivable to find the amount received from the customer. We're going to put the balance carried down and brought down to the correct side. So balance brought down will be put on the debit side. Balance carried down will be put on the credit side. Then you're going to put the credit sales to the debit side of the account receivable. So where do you get this information? This information is from the statement of financial position. So I've taken that information, right? So now I will go and put my check list here. So I have already ticked that to show that I've checked that. And now I'm going to find out what are my cash flow coming from the collection from my customer that I call cash receipt from customer. So the balancing amount that you get here is going to be the cash receipt from customer, the balancing amount. So you have 320,300 by totaling up the credit side, so the debit side, total the debit side, and after you have totaled up the debit side minus the transaction on the credit side, and there you go, you have your cash receipt from your customer, and this is an operating activity. So that is working number 1. Go and transfer that to your cash flow statement, the statement itself. So you can see here, it is being transferred here. Now we go to the second one, where we will show that using working 2. So in some question, you may find that this is related to cash payments to supplier. When we buy goods on credit, yeah, we will have to pay our supplier for the goods or services that we have already acquired. So therefore, the relevant account to assess for this is accounts payable. So you have to go and reconstruct the accounts payable to find how much is the amount paid to the supplier. You need to go and do that. How do you do that? There are 2 ways. So if you are given the purchase account, you can use alternative A, if you are not given the purchase account or purchase information, or your cost of sale does not include information on purchases. For example, in this question, yeah, your cost of sale does not state what is the purchase. So you may not know what is the purchase, but you will be able to know the purchase by constructing the inventory account, right? So you can use the alternative, the second alternative, which is alternative B, to get the answer. So if you look at this alternative A, this is only to be used if you are given the information on purchase. I'm going to use alternative B if the purchase amount is not directly available. It is there but not directly available. So you need to go and reconstruct the cost of sales account. If you do not want to reconstruct the cost of sales account, you can also reconstruct. In our case here, I reconstruct the inventory account. Yep, given. So I have reconstruct the inventory account. And if you can see here, this is my inventory account. First, I put the balance on the debit side. Relates to the balance at the beginning. There are no balance to start with in this question. There are no balance of the inventory. Yeah, go and check your statement of financial position. Right, there are no balance here. Check. Right, but you need to put a tick. Remember that. Okay, we are going to find how much is the cash payment to our supplier. So after you have done that, go and take the cost of sale. Take the cost of sale. Yeah, how do you find out the cost of sale? You will find out that by looking at your statement of profit or loss. So your statement of profit or loss, if you go to the SOCF, cost of sale is in the statement of profit or loss. Go directly there. Okay, you can find the cost of sale 9.5 million. Put that on the credit side. Put that here on the credit side. Now total up the credit side. Total up the credit side. If you total up the credit side, you get 9.62 million. And therefore, you minus the one on the debit side. No balance, right? If you have, you need to do so. So none. So 9.62 is the cash. Is it cash payment to supplier? Not yet. That is the purchase that you are trying to find. That purchase will be now transferred to the trade payable account, where? To the credit side. So this one, right? It is from this part here. You can see the arrow there. Next, put the balance of the trade payable on the credit side, the beginning balance. The closing balance, put on the debit side. Okay, do that. Do that with me. Take your calculator, take your pen, and take your papers and do with me. Okay, total up the credit side, deduct with the debit side. So the missing figure here is cash payment to supplier. Since this is operating activity, I color code as purple. So again, you go to the trade payable that is in the statement of financial position, the comparative statement, right? Yeah, you have already investigated what caused the changes, and therefore you are done with cash payments to supplier. There is one item here that were left not yet reviewed, or we have not gone through what caused the cash flow, perhaps due to the tax that were given here, any tax that were paid during the year. But apart from that, there is one more thing that you need to do, which is to find what are the cash payments to employees and other operating expenses. So if you go to this part, this is related to expenses. And we have already found out our 2 items, right? We're going to find 3 more things, which is cash payment to employees and other operating expenses, the interest paid and tax paid. We'll go to our next part, which is cash payment to employees and other operating expenses. So go and set up your operating expenses T account. Yep. Find out if you have any accrual or prepayment that are under operating expenses. When I say operating expenses, that relates to admin expenses that involve cash transaction, right? Not only cash transaction, but also non-cash transaction, right? So you put all those balances, accruals or prepaid, but here none. Distribution expenses as well. So I put them together under operating expenses. And I need to go and find out what are the operating expenses incurred during the year. To find operating expenses incurred during the year, right, you can go to your statement of profit or loss. If you go to the statement of profit or loss, you are given the admin and selling expenses directly, which is 21,350, right? That one will be transferred to the credit side of your operating expenses. All these we have already done, right? We have already checked this item. Whatever item that you check, you always put a tick. Okay. Now you have already taken this admin expenses, and you will put the admin expenses here. And you're going to put any balance on the credit side or balance on the debit side. And one more thing that you need to do here is to make or do adjustment. What are the adjustments? When you incur your operating expenses, either selling or admin, it may have also included non-cash expense, right? So we need to go and adjust out that non-cash expense or non-cash transaction when we do our operating activities. Look at step number 5 here. Yeah. Step number 5, adjust out the non-cash and non-operating transaction that have impacted the operating cash flow. So if you see in the information given at the bottom of the statement of financial position earlier, you have one piece of information here that informed there was no provision for depreciation of land. Of course, land is not depreciated. But you have that second sentence telling that depreciation of machinery amounting to 50,000 was provided and included in the admin costs. So what you need to do is you need to go and remove that non-cash transaction, which is the depreciation, from the admin and selling expenses. So to remove means you need to go and debit to the admin and selling expenses or the operating expenses that we just reconstruct just now. We need to go and reduce that and just show what are the operating expenses that involve cash. So you put that on the debit side. If you come across items like loss on disposal, you can also put it here. If you come across items like gain or whatever that have been included, but they are non-cash transaction, right? You can or you need to go and exclude. Now you can find total up the debit side, the credit side, and there are no other items. If you have any other item, maybe more complex information, you can put that. And the balancing figure by taking the total here on the credit side minus the depreciation, which is the non-cash. I put here non-cash, and remember this is the non-cash color code, which is turquoise. I use turquoise for non-cash. And this color, which is going to be purple, that will be the bank or the amount that you spend to pay out to your operating expenses, cash payments to employees and expenses, other expenses paid. So that was 21.3. So that working number 3 will be transferred to the statement here. And this is what you have here. Okay, 21.3. And you can also do a simple working by taking just the amount as per the SOPL minus the non-cash expense here. You can also do that here. But when you do the debit credit, the T account, your foundation for the double entry is being strengthened rather than just memorizing the workings and just put it there without knowing how it works in the account. That is my personal point of view. Okay. Next, we go on looking at what is our cash generated from operation. From operation means our operating cash flow. Next, go and find what is the interest paid. So this is a direct item. Interest paid, there is no accrued or prepaid interest. So whatever in the SOPL, which is this, right, will be what you actually paid, unless there are any accrued interest. Can you look at the remarks column here where I show you where I get those information? This is from the SOPL, and you can also review all these remarks column that I have included. Next, we go to tax paid. For the tax that you paid during the year, it means that the tax that you actually paid to the Inland Revenue Board or whatever authority in your country, right? So the tax paid is what you actually go and credit to your bank account and what you debit in your taxation. So our tax paid, in our case, if you look at the bottom here, no information is telling you about the tax paid. Therefore, you need to go and reconstruct the taxation. So when you reconstruct the taxation, I have already done this here for you. First, put whatever balances that you are given. If you are given a balances which are tax payable, put that on the credit side, the beginning balance. If you are given a tax recoverable, put that beginning balance on the debit side. Here, you are given the tax payable balance. Next, put the balance on the debit side for those that is for the closing balance. Therefore, you have the balance there. Then now go on looking at the tax expense. Where do you get your tax expense? Tax expense is the one that were in the statement of profit or loss. So you go to the statement of profit or loss. Your statement of profit or loss has this tax expense, the one here, right? Take that and put on the credit side of your tax payable. Put that on the credit side. So when you do that, you have 90 million there. So you total up this, this figure here, you total up. You total up and you will get the total to be 90.025 million. And the missing or the balancing figure is your tax paid, which is 89,913. And this is another operating activities cash, meaning that how much is being spent for the tax payment that is put under operating cash flow. You put that under your operating cash flow. So tax paid is 89,913 and outflow, whatever outflow, put in brackets. And this is the total. So the total from section 1, which is cash flow from operating, section 2, cash flow from investing, section 3, which is cash flow from financing, must tally with the net increase in cash and cash equivalent. Let's just try and check whether that is the same or not. Yes, it is the same. It is the same as the total here in the section net increase in cash and cash equivalent. It must be the same. If it is not the same, it is showing that there is some information that is somehow wrong. Because that is what you have to do for your cash flow from operating activities. So your cash flow from operating activities now have the item tax paid. So 197,257. So now you are done with all the steps. You can do step number 6, which is to go and finalize and reconcile the total. We have done that. We compare the total from the 3 activities with the net increase in cash and cash equivalent. In certain situations, you may be asked to also prepare a reconciliation statement, which is to show the reconciliation of profit before tax under the indirect method as compared to the figure that is given here. You can also be asked to do the reconciliation statement, but here this is not the case. We just stop at this part, and with that I thank you for watching. Remember, try and do it faster if it's in the exam. We are doing this to learn and make sure you can learn better. That's why we are using color code to make things easier for you. I thank you for watching. I'll see you when I will see you. Catch me later in my next video. Assalamualaikum warahmatullah, and have a nice day ahead.